So if you look at the key trends, 2024 and onwards, and even today when you look at the kind of space that we are operating in, is the first thing is that I don't think that client centricity has ever been more important as now, right? And as cliched as it sounds, but the more you look at data, the more you look at client feedback, I think what clients are really looking for is convenience, simplicity. And I think the key ask is that I, as an individual, will decide when and how I want to interact with the bank, right? And through which platform and which channel. The third thing is that, there's a lot of progress that people have made, banks have made on the digital transformation. So today, if you take any bank, you see that I think the percentage of the migration would be anywhere between, the lowest perhaps 65%. I think it's as high as about 85%. So the digital transformation, we've done that successfully. Now I think what clients are increasingly asking for is that don't experiment with what we call the UX UI of the app. They want it very easy. They're like, when I log in, I want to see my entire holding. I want to see what I have, what I owe, what my investments have kind of grown into, what you call like what my wealth creation looks like, what's my net kind of like holding. The fourth thing, in my view, is the future way of working and talent, right? It is a big gap, which is increasing. So obviously because of COVID, and obviously this is a global kind of like phenomena, it's been spoken to about death, is that it has transformed the way we work. Now, when the world is open, there's still people who come back and say that, okay, so if my role, if I'm, let's say in marketing, if I'm in corporate affairs, let's say even if I'm a product development person, do I really need to come to the work infrastructure 5 days a week? Or if I'm okay to come in and meet my colleagues or my stakeholders like 2 times in a week, right? And I can work from home, right? I can work in my own hours. And then you have to build that ecosystem to say that I should be okay as a line manager. Because we still have that thing, okay, if I don't see a person, they're not working. There was a whole conversation about the camera should be on, can I monitor the person doing? And I think you have to kind of ease out yourself as well to say that if I'm giving someone that relaxation, that if I'm working from home, and there are people who signed up saying, I'll work 11 to 7. So now you need to trust that at 11 the person will log in, and at 7 the person will log off and your work gets done. But that, will also enable a lot of people who are today not coming into the workforce or saying that, I want a job that allows me flexibility, so I want to come home at 1 or at 2 or at 3. You're able to kind of like not lose talent that way. And the second, bigger point is that there is a real brain drain. You go out looking for people, you don't find talent. So, I think a bigger challenge used to be how do you attract talent? I think a bigger one is how do you retain them? Because every bank, every institution, every fintech, every digital entrant is willing to pay 2x because you're finding someone who is ready, is literally plug and play. So I think that in itself, is a big thing that will transform, organizations that are able to manage this, this particular piece well, right? For me, it is like you have to step back and also see that what is the purpose and who are you catering to, right? Because in my view, you can't have a very strong digital strategy, which is like, and in my view, digital is, I'm going to onboard, I'm going to cross-sell, and I'm going to service my clients, right? And that is the promise of a good digital bank, right? That for all the services that you come to me, other than cash, right? So if you want your certificates, if you want to make payments, if you want to transfer cash, if you want any kind of documentation, visa letters, whatever you need, you have a mobile app that will help you do that, right? Now, when you do that, the question is that if you have a very robust digital banking framework, right? Or digital banking proposition, then you have to kind of step back and say, I have X number of branches, but who are they catering to and what? So if it is, let's say, I want to acquire, you can acquire without a physical branch. I personally feel that branch of the future is going to be where you will actually have a face-to-face consultative selling. So whether it's your wealth management, where you're giving people advice on how to build your portfolios, how to grow your portfolios, where you need a RM or you need a wealth advisor, you need a investment specialist sitting with you with your money because it's a substantial amount. Then the question comes, what is your high net worth threshold? Is it going to remain 15,000 US that is currently there for most of the banks? Or you really move to a $50,000, $100,000 kind of like threshold. And that is where you give access to branch, right? Or for mortgages. In my view, these are two big kind of like products for which a client would want to come and sit across you. For anything else, they could do it digitally. So, and that will determine your cost to acquire and serve. So for example, why do I need, if I need to give access to clients to cash, I can have a good CDM, I can have a good ATM, I can have a nice self-serve terminal in an area which is perhaps somewhat this, instead of a really big branch across each corner to kind of service those clients, right? And if you ask any of the clients today, if you give them access to a biometric ATM, which is to our biggest problem across all branch network is third-party clients, right? If you have access to that, and if you have a good CDM, you really don't need a branch, in my view, across, all corners of the country. I think one encouraging kind of piece is that there is a lot of focus from the regulator. So it's almost like any other policy that they issue out, and the kind of traction that they do is, it's not something that has just been done that I've rolled out policy number 101 out of the many, right? I think they actually track it and they're serious about the last two explanations. Your CEOs go and they present. So I think the level of seriousness is absolutely 100% there. So I think one of the key targets really is that how many women are you hiring? So there's a percentage that the state bank has given that X percentage of your total workforce should be female gender. Is that don't just hire at the bottom of the pyramid, because that's where you typically get a lot more, right? So you will have people who are graduating. So there is a need to kind of have these targets across the seniority. Diversity is not just gender, but it's more about you get differently abled individuals. And so I think what we have been able to do with Connect here is really have our branches be ready and our staff be ready to entertain clients who, let's say, have hearing disabilities. So all our counter staff is actually trained in sign language. We keep on doing renewals. They have access to the Connect Here contact center. It's actually, you literally have like a screen in every branch. And if you were unable to deal with those clients, we actually have subscribed for that service where they call and they're able to help that, right? Obviously, there's a big piece of work that State Bank has mandated, which is about how your branch should be like, how the space should be designed, keeping in mind differently abled people. I think there's a lot of work that needs to be done. So, when you look at corporate, commercial, and then you look at what's now defined as SME, I think when you look at SME, the kind of clients that you're looking at today, there is a lot of physical infrastructure that's required. So you will have to find out actual talent who understand credit, who understand, what to look for. There is a lot of back-end work. You need to have a credit factory. You need to have, feet on street RMs, as opposed to like having a corporate relationship where there's one RM assigned to, let's say, Engro, and it's a lot more cleaner. It's a lot more structures. Everything is documented, as you said. So you're actually making a very risk-aware decision as opposed to what you do in SME, right? But the way I think the banking industry is evolving now, I think if I don't invest into this today, it will really impact my ability to even solicit deposits. Because what am I really, especially when you're globally, you're kind of like evaluated against different metrics, right? So, if you look at what is your RWA that you're attracting, there is no merit that we get in just now parking your excess liquidity into government securities, right? I think you'll have to kind of focus on lending. And again, one avenue is mortgages, which is your retail mortgages. And the second one really is that how do you look at the SME portfolio?